What's up YouTube? Welcome back to my channel. For those that don't know me, hi, my name is Miguel and I'm showing y'all my journey on building a $100,000 passive income portfolio from scratch and having some fun along the way. And in today's video, since the market is steadily recovering, I want to show you the top stocks that I'm personally buying right now and over the next couple of months while this recession is about to hit. But before we get into that, don't forget to subscribe to the channel if you have not already. Leave a like on the video because it does help out the growth of my channel tremendously. And then comment if you agree on my buys or you have other buys that you think I should be taking a look at. Let's roll the intro. Before getting into the main content of the video, we got to go over the weekly portfolio update. As it currently stands, my portfolio is sitting at $15,452.62, up on the day overall $317 or about 2%. On the week we're up about $767 or about 5%. On the month down $131 or about 0.5%. On the 3 months down $1,118 or about 6%. On the year we're actually down $218 or about 1.39%. And then on the all-time we're actually positive $1,190 or about 8%. The crazy thing about the stock market recently is that I just hit an all-time high of my portfolio back in April, and just this last week it just about broke even with my portfolio. I was only up about $200, but now we're back up to over 8%, which is definitely good, but obviously there's stocks that I want to buy on a discount right now, but the overall market has recovered just a little bit. Don't get me wrong, we still have a rough couple of months ahead of us, possibly even a couple of years ahead of us, which is why I'm actually buying these stocks right now. With the first purchase that I did this week being Target, as we can see, about $53.40 worth of Target, that ultimately gave me 0.37 shares at an average price of $143.25 per share. I'll talk a little bit more in depth about Target in the next section, but I am down tremendously on Target right now. I just see them as a huge opportunity. Let's be honest, Target and Walmart are almost the backbone of our economy. So obviously when they do bad, they tank the entire market along with it. But before we get into that, let me show you the second purchase that I did this week was buying Chase Bank. As we can see, I bought $53.59 worth of Chase Bank. That ultimately gave me 0.46 shares and an average price of $115.75 per share. I have been wanting to increase my position in Chase Bank for a while now. I was just more focused on other stocks, but because I have thrown so much money at Starbucks and Target recently, I figured I need to throw money at the other stocks that I want to buy, especially with the dip being right now in the market. Now, when it comes to this upcoming recession, what stocks am I focused on and what stocks do I want to buy a lot of right now? The first one is going to be Apple. The tech industry had a huge boom over the past 2 years, especially since COVID hit, and they are pulling back heavily right now, which is completely okay because my favorite tech stocks like Apple are on sale right now. As we see, just looking at the past year, they're up only about $7 or about 3%, which considering over the past 10 years they have been consistently staying with the market, if not beating it, that is a really low return on the year, which is why I think Apple is a perfect buy right now. But because I had already bought so much of Apple last year, I am also going to be picking up more shares of Microsoft, as we can see here. Along the same lines as Apple, Microsoft rarely goes on sale, and they are on a huge discount right now. As we can see, looking at the past year for Microsoft, they're only up about $2 or about 0.83%, which is really nothing when you look at their all-time chart. So just like with Apple, Microsoft is a huge buy right now, and I'm personally going to be picking up more shares of Microsoft than I would Apple, and that's already because I already have almost $2,000 in Apple right now, and I want to bring up my position in Microsoft because it's barely at $1,000. So I am going to be picking up both, but definitely putting more of my focus on Microsoft. In the tech industry, specifically with stocks, I do not think we're going to see this big of a dip in a long time. So I'm definitely taking advantage of these tech sector stocks taking a dip right now. The next two stocks that I am going to be focusing on is in the consumer discretionary sector of my portfolio. As we can see, the first one is going to be Costco. Costco rarely ever goes on sale, even less than Microsoft and Apple. So the fact that they are down right now is a huge deal, at least for me. Just in the past month alone, I was able to bring down my average cost about $20 to $30, which is amazing. As we can see on their year chart, they're only up about $90 or about 23%. Which again, you could argue Costco is right along with there with Target and Walmart, at least in regards to being the backbone of our economy. So when they do bad, everything else does bad as well. But with Costco, I'm just super excited to bring down my average cost like I already have. So that way when they go back up to their appropriate value, I will just be reaping the rewards and also getting paid dividends on top of that. And the reason that I'm buying more Costco than Target is number one, I already have a lot of money dumped into Target. And number two, when Target and Walmart had a bad revenue report like 2 weeks ago, Costco's revenue report actually saved them. So for those that don't know, Walmart and Target overestimated how much they're going to be able to sell. Until this last quarter, they did not report well. Essentially, Target and Walmart almost lost billions of dollars. They still could lose billions of dollars. There's rumors that they're going to sell all of the products that they over-ordered on discount. Who knows at this point? So I'm buying heavily on Costco over the next couple of months. Speaking of Target, that's going to be the next stock that I'm focused on over this next recession. As we can see, just looking at my position, it's not looking good at all. I currently have 7.56 shares at an average cost of $201.56, and I'm down overall about 25% or about $389. I am not happy about this at all. The only thing that concerns me really with Target is that I'm not going to have enough money to throw into Target to actually be able to reap the rewards of them going down so much right now. I already have almost $1,500 in Target right now, so I have been chipping away at that. My average cost was up around $230. Now I'm almost down to about $200, but that's gonna be the number one reason to buy in Target, is just bring down my average cost as much as I possibly can. But other than just being negative on Target, I do believe in them long term. Like I said, they are the backbone of our economy, and as we just recently learned, they do really drive the economy. If they have a bad revenue report, we definitely feel it. But I mean, even looking at Target's last year, they're down overall about $90 or about 37%. So I definitely think that because of the pandemic, Target was definitely overvalued. This is a huge correction happening for them, but there's no reason why they shouldn't go back to their fair value price of around $200, especially when they were just trading over $220 over the past 6 to 7 months. The only thing that I'm truly worried about with Target is not being able to throw enough money in so they can really take advantage of this dip. Now, the last stock that I'm really focused on during this recession is going to be Chase Bank. As we know, I just bought more Chase Bank this week. They're down on the year about $34 or about 22%. The thing with Chase Bank is they are extremely volatile, but realistically, I think this is the biggest bank in America. I truly do not believe that they're going away anytime soon. But of course, it's a bank, so when the economy goes down, the bank is not going to do so hot. But I do think that Chase Bank is just a household name when it comes to banks. All of their fundamentals are there. The revenue reports are there. They are just extremely volatile. And the one thing that I can personally do right now to make sure it's worthwhile having them is just remaining consistent and bringing down my average cost over the next couple of months. And those are going to be the top 5 stocks that I'm personally focused on during this recession. The only thing that is really going to change that's going to be affected is my dividend yield. I just made a TikTok about it. They do have lower dividend yields, and so my dividend yield went from about 4.1% all the way down to a 3.5%. But that's really okay with me. All of my high-paying dividend stocks are becoming less and less valuable in my portfolio. And by the time this recession is officially over, I can start focusing on other high-paying dividend stocks in my portfolio. But the dividend yield is not a main priority at the moment. If I was retired, of course it would be. The important thing is I'm just putting my money into the market and making it work for me. But that's going to be all that I have for y'all this week. Thank you all so much for watching and showing all the love and support that you guys give me. Thank you all so much for watching. Don't forget to subscribe to the channel if you have not already. Comment if you agree on any of these purchases down below. And don't forget to leave a like on the video because it does help out the growth of my channel tremendously. That's all for me. I'll catch y'all next week. Peace.